As you can see, the stage is in all preparation for our next most awaited fireside chat of the summit, titled The Role of Financial Institutions in Advancing Financial Inclusion. Rural financial institutions, namely primary agricultural credit societies and regional rural banks, have been the backbone of India's journey towards financial inclusion, serving as critical enablers of access, equity, and empowerment in the hinterlands. The session will explore how rural financial institutions are driving inclusive growth through innovative credit models, digital transformation, and capacity building. This fireside chat will be anchored by Mr. M.S. Sriram, Professor, Public Policy, IIMB, and the speaker is Mr. J.S. Rawat, Deputy Managing Director, National Bank for Agriculture and Rural Development, that is NABARD. So our stage is all set, it is prepared. I take the pleasure of inviting on stage Professor Sriram. Please join me in extending a very warm welcome. And we also warmly welcome Mr. J.S. Rawat onto the stage. There they are, ladies and gentlemen. Joining us now on stage, Professor M.S. Sriram, Professor, Public Policy, IIMB, and Mr. G.S. Rawat, Deputy Managing Director, NABARD. A very warm welcome to both of our dignitaries. I now hand over the charge of the session to the anchor, Professor Sriram. It's over to you, sir.
Thank you. Good evening. Thanks a lot for having us here for this fairly interesting, hopefully interesting chat. Let's try and make it as interesting as possible. This is looking at institutions and in advancing the agenda of financial inclusion. We've been talking about it for the last 20, 25 years, what is new, right? When we're looking at what is new, if we were to look at broadly the history of how we've evolved, we started with cooperatives, All India Rural Credit Survey, and then state partnership with cooperatives, moved on to nationalization and getting the public sector banks to do a lot of rural and inclusive finance, then moved on to regional rural banks, then NABARD was set up, and that was the last institutional initiative from the government side. After that, there have been only policy initiatives. The policy initiatives resulted in local area banks, small finance banks, and other such institutions. Now, with Mr. Rawat with us, representing NABARD, we would like to go back and ask what's happening with cooperatives. Where did we start? And as of now, there seems to be a renewed interest in cooperatives, given that the Ministry of Cooperation is also with a very important member of the cabinet who also holds the home portfolio. But we would, I think we would like to call him the Minister for Cooperation with home as additional charge. But please tell us what's happening on cooperatives.
So thank you, Dr. Sriram. I think I would say a lot is happening around cooperatives. And the bigger picture, at the Government of India level, all of us know that we have a bigger vision of Viksit Bharat by 2047. And government's intent is not just developed nation, but an inclusive and participatory growth-led nation, developed nation. So that's the bigger picture. And government is very clear that it has to be an inclusive development story, economic growth story, where every segment of the society participates, contributes, and benefits from it. And one sector, the government's belief is one sector which can actually contribute this inclusive growth story is the cooperative sector. That's why this renewed focus on cooperation and cooperatives. And if you see, the intent is very clear by formation of a Ministry of Cooperation, a dedicated ministry. Earlier, you know, it was a small part in one of the ministries, and there was no dedicated focus in terms of development of cooperatives. So although there were bits and pieces in terms of different initiatives, but if you talk about a dedicated focus, it was never there. So now with the formation of Ministry of Cooperation, a lot of initiatives, a lot of interest is there. And if I speak today, almost 55 plus initiatives from the Ministry of Cooperation for the development of cooperative sector. And you must be also be aware that recently the National Cooperation Policy has been inbuilt. And the aim is that how do we ensure the next level, the next growth story for the cooperatives. And it has 6 broader themes that how do you make the cooperatives ready for the next growth set? How do you make it ready for the next challenge? How do you bring youth? How do you ensure the strengthening the foundation? How do you strengthen the foundation? How do you increase the outreach? So these 5, 6 major themes are there, and all the initiatives are happening around this. So if I can say in terms of laying or strengthening the foundation, the major focus of cooperatives and cooperative ministry right now is how do you strengthen the base level institution, that is the cooperative credit societies. How do you strengthen them? And all focus is on that, because the belief is if that is strengthened, the cooperative movement will strengthen, and the upper layers, the other layers will also strengthen.
So at one time we had about 100,000 cooperatives, around 100,000 cooperatives. When we did the Vaidyanathan committee, we thought that number was active was around 60,000. What are the numbers, and what are the initiatives that we are going to have in areas where cooperatives have been dormant or have not been active? Are there plans to promote new packs, revive packs? What's happening at the grassroots level?
Yeah. So the grassroots level, so you rightly said, so we have about 1.04 registered cooperative credit societies at the ground level. So about 80,000 of them, we can say either viable or near viable. And the first thing that is being done to strengthen them is the PACS computerization. So we are going to digitize them. We are in the midst of the digitization process. And in fact, we have reached almost about 70-75% of the work related to digitization of this cooperative sector. So that's the first thing. It will bring a lot of transparency, efficiency, and also governance improvement in overall cooperative credit societies. So that's the first thing. So digitization process. In fact, I would like to also highlight this. We had proposed this digitization way back in 2014-15.
Right.
And as soon as the new ministry was formed, they took up this idea and this program was approved. So that is the first thing, digitizing these cooperative credit structures. So second is, now you talked about viability, how much of them are functional, how much of them are non-functional, what is being done. So second thing that is being ensured is how these cooperative banks improve their business. How do they become active? How do they bring more members in their fold? So that is the second narrative that is being there. So what we are doing is cooperative as a single source at the grassroots level for all types of services. So right now we are talking about different types of activities, right from a common service center to a farm mechanization as a over center, to world's largest grain storage where they will have a grain storage, to the extent of running a soil testing lab, to a petrol pump. So you name anything which is required at the village level, the intent is that it has to be through the societies, to these cooperative credit societies. So it's not only credit, but the businesses and the services that these institutions will provide to the grassroots level in a cost-effective way at their doorstep. So that is another thing that is being done.
Academic studies in the past, particularly looking at the failure of the primary cooperatives or non-success of the primary cooperatives and corollary success of the cooperatives, have identified two broad, ingredients for success. One is diversification of activities, and which you have covered, saying that they will be doing petrol pumps, they'll be doing other activities, which sort of meets all the needs of the prime, which means that the concentration risk on the loan portfolio is removed and there is a diversity of income. But the second thing that the cooperatives, not only primary, but the cooperative sector itself studies, suffers from is something called lack of capital. Essentially because they are member controlled and member capital is only limited, right? How do you plan to look at the capital requirements of primary cooperatives? Because unless, in the first phase there was something called state partnership and there was a lot of state this thing. I don't think there is a budget line item for capitalizing cooperatives or this thing. So is there any other thrust? And what are we doing with vis-a-vis savings? That's, on the inclusion front, I think we've concentrated on credit through the decades. Except SHG, there was no savings oriented this thing. So is there any initiative that's happening?
Yeah. So as I said, I mean, it's not only the credit plus activities and services. That is what we are looking at. So once that happens, the profitability of the cooperatives, the societies increases, and that is one source of capital. The second area that we are looking at is, you rightly mentioned, that the savings of these cooperatives, how do you ensure that? And that is a factor of trust and the membership. So if you have a trust as an entity, people will come and put their money in you. It's like if you are only a borrower of a cooperative credit society, I borrow from you and then forget what's happening at your level. I'm not worried what the management is doing, what the board is doing, what the secretary is doing. But if I place my money with you, I'll be worried. I'll be questioning. I'll be asking you that what are you doing? So there is a lot of focus on how do you increase the membership drive, and also how do we ensure that these members also become a depositing members, not only the borrowing members. So two things, that initiative that we are taking. One is we are thinking of a credit insurance deposit insurance scheme. So I think that is in a very initial stage, but that is a thinking that there may be some budgetary provision from the central, from the state, and also participation from the higher tiers, including the societies themselves. So that is one thing where we are thinking that this how the member-driven resource mobilization in form of deposit can strengthen the submission. So that is one. And the second is, by virtue of increasing the capacities of these societies to provide multiple type of activities and businesses, it generates sufficient income, it improves the membership drive, and as more and more members join, so as a part of their equity participation also, it improves their overall base.
And is there any initiatives towards governance reforms at the primary level? I mean, because ultimately one of the problems with the cooperative sector is if it's a credit cooperative society, then borrowers are the board and there's a conflict of interest there. Is there some way to look at the savers having a significant say in the board? I mean, legally, are there some initiatives towards reform of the policy to ensure governance reforms, or that's a little further away?
That's a little further away. So what, in terms of reforms and governance and HR, actually a common narrative is that one thing that we have to see here is in the HR front. So because there is a issue related to manpower availability and adequate manpower availability. So on HR front, we are framing a common policy, common model policy for the entire nation.
Right.
So that will help better structure in terms of manpower. So that is one. But in terms of governance, so there is a Model Cooperative Credit Societies Act that has been circulated. And in fact, most of the state governments have agreed to adopt that. And in fact, many of them have also adopted that. So there, these provisions related to what will be the rights of the member of a society, those things are factored in. But governance is also a factor of many other things, which includes adequate manpower at the PAX level. So that is what the theme going forward is.
I think the last question on cooperatives, and if you want to add something more, please do, given that there is so much of activity happening. How are these cooperatives going to be integrated with the value chain in terms of FPOs and other initiatives that are happening, particularly with output processing and so on? I mean, are they going to be procurement points? Are they going to be integrated with FPOs, or FPOs will be a parallel activity? Because you're talking of multi-purpose. So, for example, if there is a cooperative which is collecting grain and cannot process itself, can it tie up with the FPOs, or is it going to get into the market and sell? And what is the
So, I mean, it all depends upon the capabilities and the opportunities as a local level. So we are not saying one side fits all, and there are different models that we are trying. So one is, so there is also opportunity where they can collaborate with the FPOs, existing FPOs, and do this, the second layer of activities, the post-production activities. So in the entire agri-value chain. So that is one model. Second, we are also trying to tie up with different other entities in terms of, for say, their technological innovations and various other services with the agri startups or the fintech companies, which can provide that sort of professionalism to these cooperative societies. So tie up with that. And the third is engagement with the various national level cooperatives. For example, now for the purpose of procurement, for the purpose of hiring, so there is a scheme for world's largest grain storage through cooperative societies. So there is an integration with the national level cooperative societies like NAFED or with something like a FCI, where there is a hiring arrangement, where there is a procurement arrangement. So the societies will be having a storage. They will be procuring on behalf of NAFED or other national level organization. So different modalities are there, different convergences are there in terms of what fits and what suits a local level society. So it's not just one size fits all, but different. And one good thing about this new cooperative movement is, from the government side, there is a lot of convergence that is happening. So other ministries at the Government of India level are also seeing PACs or the cooperatives as a implementing entity at the ground level. That through them, so many things can happen at the ground level. So that lot of convergence is happening around that, and that is where, when I talked about, say, FCI ensuring a hiring to a PACs go down for a period of 10 years, 15 years. A NAFED ensuring you procure, will hire your go down. So that's sort of a convergence. So these are the different types of convergences that is happening, and that is where this entire agri-value chain, including the private players. For example, we are working on a pilot where we will be working with Dehat. They bring in their professionalism in terms of their businesses and initial business of input, output or marketing. The Dehat's professionalism and their technological capabilities comes into play, and PACS works as a conduit for the members from the member side. So that's sort of an innovation. Another thing I would like to mention is, with the PSA, Principal Scientific Advisors to the Honorable PM, we are talking about rural smart village centers through these societies, where the technological intervention, the technology which is in the lab, how it can be transmitted to the members through these cooperative societies. So that is another channel that we are linking. So there are multiple channels that we are working to how to have these cooperative societies become really a multi-purpose and I would say, collaborative approach at the ground level.
Obviously, there's a lot happening and none of us know about it. So you've kept it neatly under the wraps.
No, it's not under wraps. So now that once the result starts coming up, you will see it.
Okay. Let me ask a slightly provocative question. I mean, not so provocative, but if we were to launch NRLM 2.0, would the nodal point be a PAC instead of an SAG? Do you think that would be a better thing from a futuristic perspective? I'm not looking at it from a critical perspective. I'm saying, would that be a little more effective?
So one direction that we are looking at is the SHGs, the right now SHGs, uh, they already have a cluster level federation.
That's right.
So 10, 15 SHGs already are there. So they form a good cluster. So we are thinking whether this cluster level federation can actually become a cooperative society
Okay.
and provide the same type of services which a PAX is providing. So that is a possibility. You brought in a right type of question. So that we are thinking that how it can be done.
Oh,
How
okay.
it can be done.
Okay.
So we are looking at the legalities and the different structures because some of them are not registered in the cooperative societies. So whether they can be registered as a part of cooperative societies and do the same type of function either as a BC, either as a financial intermediary or also other input, output or different types of other businesses. So that is one way of thinking that's already going on.
So, though I said last, I have one more last question on cooperatives. Uh, look, I was at the committee that, I chaired the committee that consolidated the Kerala DCCBs along the state cooperative bank, right? Converted a 3-tier structure into a 2-tier structure. The thought process in the committee at that time was that we don't need DCCBs, we need a larger banking entity for 2 reasons. One is because of technology, there is no necessity for a decentralized institution to be there in the middle. Of course, we need it at the grassroots, so PACs should not be touched. Second is, if there's a larger institution, you can give complex banking products through the PACs back to this thing, because then it becomes a large regulated entity, and therefore it could offer payment services, possibly insurance agency, possibly credit card, debit card, tech-enabled products. For that, you need a certain size. Is there some thought of looking at that sort of a consolidation? Because world over, if you look at it, cooperatives are delayered. While they have not removed the primaries, but the upper tiers have all consolidated, whether it's Desjardins or Rabo or Raffaelson or any of these. So is there any thought on that as a part of the reform?
So in fact, the intent is that we have a district bank in every district. So that's the thought process. And the whole idea, you talked about consolidation and better adoption of technology and all at a higher level with a single layer. But that we are ensuring without consolidation also. So how we are doing is at the national level, we are setting up in fact, we have set up a shared services entity that is called Sahkar Sarthi Private Limited, which will be providing the entire technological services for not only within the state, but for the entire country. So this will reduce the initial cost of capital for the smaller entities so that they don't have to invest heavily in adopting technology and the related things like risk management, cyber security. So at the national level, there will be only one platform and different types of tech services can be provided to these smaller banks across the country on a plug and play mode. And they don't also have to meet so many other regulatory requirements, the HR, the maintenance, managing vendors. So this is what we are doing. So that will ensure, ensure that even the smaller entities also can provide the technological services which the large public sector banks or private sector banks are providing.
Thank you very much. I think possibly this is the first time that we have dedicated a full 25 minutes on cooperatives in this inclusive summit. Otherwise, we usually talk about microfinance, inclusive finance from a JLG perspective largely and SHG perspective. So I think this has been not only useful and very educative for me, but I'm sure it's very insightful because not many of us track cooperatives as closely, and I'm very happy that to hear that NABARD is doing so much on the cooperatives, rediscovering this, and you also offline were telling me that what you're doing about the data and how the data will come up. Wonderful. We'll move on unless you want to. Is there any other thing that you would like to say? Sure.
One thing I'd like to add is the intent at the ministry level, the Ministry of Cooperation level has been that what are the challenges that's being faced by the cooperative sector right now and how can you address it?
Right.
So in terms of policy, in terms of governance, in terms of infrastructure, so ministry's key thinking is that we will resolve all the issues which the cooperatives are facing, and then cooperatives have to follow the rules, regulation, and processes. So there will be no relaxation in term when it comes to governance rules, rules and regulations, but we will address all the concerns that the cooperatives are having. So that is the intent that with which the ministry is working.
Fine. If there's nothing else on cooperatives, we can move on to RRBs. Because I thought it might be good for us to talk about the three big pillars on which NABARD stands. One is RRBs, cooperatives, and SEGs. What's happening vis-a-vis RRBs? There's been a lot of consolidation. I personally think consolidation is a bad idea. The reason why I say it's a bad idea is essentially because if your imperative is area-based inclusion, then an institution that has a limitation within an area would deepen if it has a restriction. And in any case, since it is state-owned, viability is a secondary issue. It can always be recapitalized in case, if it's not into fraud and other things, and it's genuinely this thing. But we have gone through a series of consolidation which sort of reduces the focus, and it becomes like any other bank and any other bank branch. So what has been the advantage of consolidation of RRBs? And do you see any downsides of consolidation of RRBs? Or are you grappling with some?
So so I understand. Why I'm asking this question. So the local touch and feel and the, familiarity with the locality or the local people. So that is your concern. But I must say that after these three phases of consolidation or the amalgamation, and now we are also with the fourth one that also we have completed. So if you see the progress, so right from 2003-04 when the first amalgamation happened, and till 2021 when the third one happened. So in terms of increase in their business, in terms of increase in their financial inclusion drive, things have improved. So there has been substantial increase after the consolidation. So it's a well thought of direction that the government has taken, that when they first consolidated in when these banks were in loss in say early 90s or subsequently because of different challenges, 2003-04 when we first did it, after that what has been the impact? And the impact has been positive. The banks have become more stronger. They have a stronger capital base, technology adoption is better, and as I said, the business has improved. And most importantly, with only about 10-12% branch network, they are contributing almost 20-21% in the financial inclusion drive. So that's the positive. So that's why this last leg of amalgamation also happened. And to your question about the familiarity, because it's within the state, and in terms of language and in terms of the branches or the people, those who are manning those branches are similar, not much of a change has happened. So it has not impacted that way, in a big way.
See, the data seems to hold out what you've said, both in terms of, I was just looking at the statistical statements for 25, which was recently released by the RBI. RRBs get 93% of their deposits from households. So their savings, this thing is there. When you look at their deployment of credit as well as savings, they're largely from, one of the things we did not have was a regional disparity. North, central, northeast and eastern regions were lagging compared to south and western regions. That distortion RRBs have addressed. So in a way, at a regional level, yes, they have done well on the inclusion agenda. On the savings side, they have done well on the inclusion agenda. Possibly at the state level, they might have. My question is, when we look at the districts, are there some, dark spots? And that's what a 3-district RRB could have done, which a state RRB possibly might have still dark spots in the district, while the RRB itself might be doing fairly well. That's the only thing.
So, but I would say again that there also, because at the state level, within the state, at the district level, so there were in certain geographies there were disjointed. The continuity was also not there. Because when these RRBs merged at different levels, as in one
Right.
state had 2, 3, so that was also there. So now with a overall amalgamation, one state, one RRB, we have addressed that also. So district level, maybe in certain pockets that may be there, but as a whole, I would say it's been a positive overall.
So is there a convergence between the plans of NABARD developed by the DDM and the lead district managers' plans, so district level credit plans and the
So
PLPs that NABARD comes out with? Is there some convergence that's happening?
convergency, I would say, ideally speaking, there should not be any convergence because we are preparing a potential
Oh, okay.
and the lead banker is preparing a deployable plan.
Fair enough.
So potential should always be much higher than
Fair enough.
what
I
is
take that point.
dependable. But yes, so because of some practical reasons, there is a convergence at the district level. But ideally speaking, if you ask me, there should not be any convergence. Potential should be much higher than what is implemented at the district level.
Okay. Anything else you would like to say about RRBs?
No, only thing I would say is ki, this amalgamation has really strengthened these banks. If you see, many of these RRBs are at par with the public sector banks in terms of profitability, in terms of their coverage, even being limited to a state level. So the amalgamation process has really helped and it will strengthen further. And now with a common branding across RRBs, single brand, single nomenclature, so it will also help their identity much more. And at the state level, having one RRB, so it's going to have a positive impact on them.
So given that NABARD has been handed over the cooperatives agenda and of course the consolidated RRB, and the government has taken away the SAG agenda through NRLM, how do you look at what is happening in SAGs? Have they really
See,
taken over the SAG agenda or you still have it?
I won't say, I mean, we are really happy. We are really happy that the government took it over and took it to the next level and upscale it at the national level. And that's where we are today. So because otherwise at our level, maybe we would not have been able to take it to that level. That is what all our pilots are all about. So we display a pilot, make it successful and see how it is upscaled by convergence and I mean government taking it to the last level or the.
So in a way, are SAGs relevant at all today? I mean, the reason why I ask is, I mean, of course, sentimental reasons, we'll say they are relevant. Of course, I mean, that's a different, we have promoted it, they're working and so on. But if you look at the objectives of inclusion parameters of women getting included, and SAGs were pioneers, followed by JLG model of MFIs. Now, when you go to a village and talk to a group of women, they are saying we have 10 or 15 lenders ready to lend to us. So, in a way, have we sort of sorted out the market as far as inclusion of women is concerned, and therefore we need not worry about what happens to SAGs?
See,
Because
I mean,
the function
so,
of credit and access to finance is already there.
So I mean, so maybe you are talking from the numbers, or you might have interacted with some SHGs practically at the ground level. But if you see the overall number, so although we are saying that we are having an outstanding of more than 3 lakh crore,
That's right,
75,000 deposits,
Yeah.
and more than 1 lakh SHGs, 17 lakh, 1 crore SHGs, 17 lakh households. But if you see today also, the credit linkage gap is almost 40%. Still we have 40%. Average ticket size is less than 3 lakhs. So still there is a lot to do. And maybe one SHG which has a multiple credit history, repeat credit and interaction with the bank, there are 10 banks who are ready to provide, but there is equally, as I said, 40%, where still there is a credit gap and a lot more to do at the ground level in terms of their linkage, in terms of taking them to the next level.
Are we-
Still some work to do.
Are we looking at it from a slightly narrow point of perspective by saying what is the offtake of credit from an SHG rather than saying what is the indebtedness of the woman or the family? That's one. Second is, should the credit in fact increase? You know, because one of the things that you find in the microfinance this thing, and that's why every 3 years we have a crisis, is because up to a level where what I call as self-employment, which is backyard, where there is no significant capital, this thing, but using current capacities, you augment your income. But the moment you want to go to the next step, which is from self-employment to entrepreneurship, not all women get into that stage, right? And therefore, why do we need to worry about it? I mean, those who graduate will find their own bank or anything because they would in a way display entrepreneurship. So why don't we stop here and
So,
be happy?
yeah, so I mean, that is one way of looking at it, but I would still say at the ground level, at the village level, when you're talking about entrepreneurship, suppose I'll give you one example.
Sure.
So recently, when I was in Maharashtra, so we ordered SHG that whether you can supply these 500 pieces of XYZ to us. Then they said, yes, we can do. So we asked, how are you going to do? See, so they said, we have 10 SHGs with us, almost 500 members. One SHG prepares one. We can provide you in one day. So even if the enterprises that are being set up at the ground level, most of them, because of their smaller size or the marginal size, so there will still be requirement of those people, those who work around that enterprise. So for example, a SHG member starts some business, but they will still need the workforce who works with them. So that is how the integration still happens. So even if they come up, unless somebody, I mean, comes out with an entirely innovative thing and the dependency is lesser, but then still they will need that sort of a convergence, that sort of a integrity within the group where they depend on the members themselves as a worker or also as a owner of the institution. So that is why it is important that this will still be relevant. And talking about your question related to indebtedness, whether it is actually required or not. So I would say, I mean, the microfinance example that you gave is, I think that is more of because of a higher cost. That is the challenge. So we are talking here about the lending through the more of a public sector bank or private sector bank where they can get at 7%. So if it is a SSG and RLM, so they can get at 7%. But if they, same thing, if they are getting at 20-25% and still there is a demand, so that means something is there, some requirement is there. So that's why this credit requirement will always be required if they want to really set up and move on to the next level. So this has a relevance. Only thing is what is the source where they are borrowing from. That is important.
So from NABARD side, what next for SHGs? Any big plans? You had gone on digitization. Where is it led? Second is, are the SHG data being uploaded to the credit information companies? Is there some initiative on that? How do we integrate all this data together? Are there any initiatives that NABARD is taking on the technology and digitization front?
So 2-3 initiatives. I think you must be aware that the NRLM is working on a platform for low cost where the credit history of the SHGs will be available on a real-time basis. So that is one where we are working with them, that how we can take it to the next level. Second, one major area that we are working on is that this ultra poor, those who don't have any credit history, how we can build credit history on that. So we are running 2-3 pilots on that, where we are working on a retainable grant concept, where we'll be initially providing them with some capital, some as a grant amount. It will not be a loan, but it will be a returnable grant.
Right.
So if they succeed,
then it will be treated as a repayment of loan.
So
the
voluntarily they give us back some part of it, and it creates a history for them.
Correct.
And then it migrates them to, generating a credit history, and then they will move to the next level. So that is one pilot we are running. So let's see, if it works, we want to upscale it. So.
Wonderful, wonderful. Anything else you would like to say about SHGs before? I'll just ask two more questions and then we can open it up to audience if they have any audience questions. I don't see, this is not on a QR code basis, so we have to directly ask the questions. Okay. Because morning they had a QR code and the question would pop up on the screen. So, but that's not happening now. Anyway, two. One is, there's a very interesting data that all the banks have been achieving their priority sector lending targets, including agriculture direct. right? Which is 18%, 13.5%, small and marginal, everything is checked. And where it's not checked, through e-Kuber, it's being traded, right? Agriculture itself is not growing at the rate at which banking is growing, bank credit is growing. Bank credit is growing sort of reflecting the GDP growth. Agriculture is growing at 3 to 4% CAGR. So given these two numbers, we should have saturated agriculture credit over a period of time as of now. But we know that that is not true, right? So is there a problem on how we have defined priority sector lending, agricultural credit? Where is the, slip between the lip and the cup?
So, I mean, I would say achieving priority sector lending and agriculture targets is a good thing.
Yeah, of course it's a good thing.
Because why I'm saying so is, it's not just the crop loan, but other segments also like agri-infra, ancillary activities, different types of allied activities, that is also being achieved by the banks, and a lot of that is required. For example, agri-infra is required to supplement the agri-production and other activities. So from that perspective, I would say it's good that banks are achieving. But at the same time, like you said, the expansion of the scope of PSL has also helped banks to achieve that PSL. And also there is a concept of PSLC, you might be aware. So that has also helped the banks. The area of concern for us is only two. One is the small and marginal farmers and weaker section.
Right.
They are not getting adequate credit or lesser credit, I would say. And the second is the regional imbalance. So these are the two concerning area for us. And then within these small and marginal farmers also, another major area of concern is the tenant farmers or the sharecroppers. How do you reach out to them? So because right now, hardly 5% of the credit is going to these tenant and sharecroppers. So these are the two areas of real concern for us. And then we have to really design some innovative ways. How do you reach out to the tenant farmers and the sharecroppers? In fact, we are running a pilot on that along with Reserve Bank of India. How to programmability of the CBDC, Central Bank Digital Currency. So we tag that tenant farmer with that digital currency and program it so that it is used only for that purpose. Because otherwise you don't have a record, the landowners are not ready to share, to share that he is actually cultivating my field. So that's the challenge. So now that programmability of the CBDC we are trying to design so whether it can help. So these are the two concerns for this.
So on the regional imbalance, RBI in its priority sector lending norms has now started giving weightages, right? 0.8, 1.2 and 1. Has that helped or it has not helped?
So it started
Banks say, ठीक है, 0.8 ही कर लेते हैं and then we'll do more of 0.8. I mean, is that how they're looking at it?
No, I think the banks are still not meeting the small and marginal farmers
Right.
and weaker section target in the PSL.
That's right.
So that is one area that is the banks are also understanding that. But this also, I mean, when it is a region-specific, district-specific, credit staff district, so I think this will help. So this started only from the last year.
Correct.
It should impact. It should impact positively.
But as of now, that
Yes.
impact is not seen yet. Fair enough. The last question I would ask is in terms of capitalization of FPOs. The same question that I asked with PACs. FPOs. Because in PACs at least you can say member savings and you generate resources. But the moment you go to FPOs, they will need to do some processing, value addition and so on. The capital requirement will be much greater. And expecting farmers to put in that capital would be difficult. So how do we look at capitalization of FPOs? Given that if you are looking at it, ultimately they are companies. So therefore they are guided by all your NCA norms and so on. So if somebody has to lend also, they will look at it as a company. They will not look at it as an FPO.
So I think what our motto has been that the FPOs should not directly jump into capital intensive things. So that is one. So they build up, and over a period of time when they have adequate capital, adequate experience, then they should go in for a higher capital intensive thing. But having said that, there may be a requirement and there may be opportunity to have such activities. So two things have happened from the government side. One is under the 10,000 scheme, government provided a equal contributory capital to them. to the FPOs. So that is one source where the capital is supplemented without violating their Companies Act,
Right,
the outsiders
right,
can do. So government gave it as a grant, so matching grant to the capital. So that is one where the government has chipped in. Second is in terms of giving comfort through the credit guarantee scheme. So there is a credit guarantee scheme which gives the comfort to the bankers so that they can lend to them without security and without collaterals. So these are the two initiatives that has been taken. But otherwise, because the question that you asked is capital intensive, higher requirement, because we have seen practically at the field level, because of subsidy or because of some grant component, FPOs have set up huge infrastructure,
Right.
but they are not able to utilize that.
Yeah, working capital is not there.
So either the working capital is not there or the was
Capacities
not well thought of.
or capacities.
Yes, core capacities. So that's why when we discuss with the FPOs, the initial stage what we are talking is start with a lesser, you develop your capabilities, then going for a larger one.
One more, and I'm sure you would have faced this in the field as well, because FPOs are companies and they are under the Companies Act. There are several problems that emanate. Your DIN generation, your annual video KYC, compliances, company secretary, and so on. And when the 2013 Companies Act was passed, it was recommended that while they retain it as a chapter in the Companies Act, they recommended that it should be a separate act. Should it be a separate act, and is there any move towards making a separate law for FPOs so that we can overcome all these things? Recently there was also another abhiyan that there are women directors of FPOs and they're being denied ration and some of the benefits essentially because they already have a DIN number.
So I would say, I think we have to develop an ecosystem where it becomes more efficient to meet the compliances and requirements. So we can, I think we can develop a platform or ecosystem which provides these different types of services and compliance requirements as a platform at a lesser cost, so that they can easily meet those requirements. So that will be a much more practical way to see that how it is met, how these challenges are met.
Thank you very much. If there are any audience questions, we'll take it. We have, what, you want to stop? Okay, fair enough. Yeah.
Good afternoon. Just in the previous session, we touched upon the specialized banks. Particularly, it was related to the women-specific bank. So, considering the idea there the specialization should go into the banking mainstream. The only sensitivity should be there, not the dedicated bank. In that context, sir, RRB's consolidation has been a great effort. I guess you have already conveyed that. But do we see that also be converted or the expanded to be freedom to have a general banking, mainstream banking, rather than limited RRB framework, the convention framework?
So I think you are talking about RRBs having some limitations. So I think today RRBs don't have limitation in terms of, neither in their overall administrative way or in their financing model. So they don't have any limitation. The only thing is the area of operation is limited to a particular geography or a state. So otherwise they are at par with other banks. They can perform, act like any other bank. So they are treated as par with any other scheduled banks for that purpose. So no limitation as such as of now.
Okay, I think you have a flight to catch, I have a flight to catch, and there's a valedictory session in between. So I think it's been wonderful having a conversation with you. You've been very candid and very patient. And thanks a lot. This was a very, very educative session for, at least for me, because there's a lot of things that are being undertaken by NABARD and the Ministry of Cooperation, which you sort of brought to light today. And I'm sure all of us would have benefited understanding what's happening beyond the microfinance and the inclusive finance that we know of. Thank you very much for this very insightful session. Thank you.
Thank you. Thank you very much.
Thank you, Professor Sriram. Thank you, Mr. Rawat, for this very candid conversation. We would like to present a memento to both of you for expressing our thanks and gratitude.